One stock just cracked today's top 5 for July 13th. Eli Lilly is reshaping the pharmaceutical industry. A $400 billion surge in value is forcing the entire sector to recalculate. Today we're looking at LLY at $1,188.58, down 2.33% on light volume, and asking whether this pullback is a gift or a red flag. The company dominates GLP-1 therapy, Alzheimer's treatment, and cancer care, three of the highest conviction growth vectors in biotech right now. What matters today is whether the pullback holds, or if we're about to see another leg higher. Let's break down the technicals and options flow to see if the smart money is buying this dip. The stock is trading at $1,188.58, down 2.33% today on nearly half its average volume, which means this is a low conviction sell-off. More importantly, look at where it sits relative to its moving averages. The 50-day is at $1,086.36, and the 200-day is at $993.95. This is textbook bullish alignment. The stock is holding well above both averages, which means the primary uptrend is intact. Price is within 4.9% of its 52-week high, so we're near peak territory. Support sits at $1,079.22. That's the 50-day MA, which is holding. Resistance is $1,249.45, and that's where we'd see sellers step in again. RSI is at 57.16. That's neutral territory, neither overbought nor oversold, which means there's room for the stock to move in either direction without hitting an exhaustion extreme. This is actually healthy for continuation. It tells us the rally hasn't burned out yet. The moving averages are in textbook bullish alignment, 50 above 200, both rising, price holding above the 50. The $1,079 support 50-day MA has held through this pullback, which is the kind of technical confirmation you want to see before committing new capital. A break below that level would signal early warning of a larger pullback, but so far the structure is intact. Eli Lilly's $400 billion surge is real. GLP-1 drugs are reshaping obesity and diabetes treatment, and LLY is the dominant player. But that's also the risk. Pharma valuations are cyclical. When a megadrug enters its saturation phase, growth slows and multiples compress. GLP-1 competition is intensifying from Novo Nordisk, Amgen, Viking, and others. The second risk is regulatory. Any FDA action on pricing, reimbursement, or efficacy could crater the entire class. The third is earnings uncertainty. We don't have a clear date, but biotech earnings can surprise to the downside when efficacy or safety data comes in. The $1,188.58 entry assumes the bullish thesis holds. If it doesn't, you're short 16% to the next support level. The put-to-call ratio is 1.044. That means for every dollar bet on the stock rising, about $1.04 are bet on it falling, which is a mildly bearish positioning. That's important because it suggests traders are being defensive here. They're hedging more than they're bullish. ATM implied volatility is at 19.92%, and we'd need to know the historical percentile to judge whether options are cheap or expensive. If Roman 4 is near historical lows, then buying calls right now is cheap insurance on further upside. If Roman 4 is elevated, you're paying extra. The fact that puts are slightly bid up suggests smart money is considering a deeper pullback, so the $1,079 support becomes even more critical to watch. Verdict: watch up with moderate conviction. Entry zone is $1,188.58 to $1,212.35, and your hard stop is $1,172.03. That's about 1.4% below current price, defending the daily structure. If you do enter, your three targets are T1 $1,243.72 profit-taking level, T2 $1,265.62 stronger resistance, and T3 $1,281.50 extended target. Here's where it gets challenging. Your risk-to-reward ratio is 0.57, which means you're risking $16.55 to make $55.14. That's a suboptimal payoff. You're risking nearly $1 to make $0.57. This only works if conviction is high, which it isn't. Wait for either stronger confirmation or a deeper pullback to improve your entry, and R math before committing. Eli Lilly is a structural winner in GLP-1, and the $400 billion tailwind is real. But today's entry at $1,188.58 asks you to risk $16.55 for a $55 gain, and that's only if the stock reaches your third target. Moderate conviction doesn't justify that math. Watch the $1,079.22 support. A hold there is a green light, and a break below is a yellow flag. If you already own LLY, this pullback is a normal breath in a strong uptrend. Hold and use support as your mental stop. If you're looking to enter, wait for either a bounce off $1,079 with a reclaim of $1,100 or a deeper pullback to $1,050 to improve your risk to reward. Always do your own due diligence. This is analysis, not a recommendation.